Hey guys, you've joined us live at Money Control. I'm Manisha Gupta, and the top story is clearly coming in from crude, where we have seen the prices decline by nearly 3% in the overnight markets, and that makes crude prices at a 6-month lows. We are trading 12% on the lower side on a monthly basis as well. And when it comes to crude, there have been doubts that the OPEC and allies' output cuts may not be enough. But apart from that, it is the US inflation data that now suggests that the first quarter of 2024 may not see interest rate cuts. The street is waiting for the US Fed decision today, and in the meanwhile, you have EIA, which has cut the Brent price forecast for 2024 by $10 to $83 a barrel. So there have been some negative news as well, but the market's really not taking the premium right now. This is also from EIA, which suggests that while this year we're looking at 12.93 million barrels per day of an output, but next year it could be a record output from US at 13.11 million barrels per day. Even as the Norwegian commercial tanker has been attacked by Yemen Houthis, we haven't seen that premium come in for prices. The big news clearly is from COP28, where the negotiations seem to be finally taking some form right now, where the expectation is that from the word phasing out fossil fuels, the word that is being used in the draft is transitioning from fossil fuels, and that is going to be an important one to watch out for. Joining us now is Peter McGuire from Exim Australia. Peter, hi, thank you so much for joining. And I want to start with the COP28 statements, which are coming in right now. We are still awaiting details on whether or not all the members have signed in, but it does look like that with the word changes and the timelines that could be set out, there could be some information coming in on this one in minutes from now. How would you look at the crude oil prices react to this?
Well, good afternoon, Manisha. I think, it's we've waited for that number to drop, or when I say that, the announcement to drop. And the situation quite simply is crude prices have really had a really big push down over the last 7 weeks. We're expecting that to continue certainly this week and maybe even next week leading into Christmas. So they're really being pushed down hard. And, the transition for COP, yes, we understand that, but that's a long way out in the sense it's 2050 to transition to no fossil fuels. But I think that's probably going to continue to push into bear market territory.
With the way the prices have moved, and December perhaps is going to be a third straight month of decline right now. And from S&P Global to World Bank to IEA, everybody is now started to downgrade the price projections for 2024. What's your sense on what range we could really look at when it comes to prices?
Yes, I mean, when you're looking at that, a lot of analysts have stripped out, $10, $12 out of that. So, that mid 95, it's certainly now, butting its head against 80. So probably it's going to be around that $80 handle. And I think that, it's going to be interesting the first quarter, how we set ourselves up as far as rate policy, what comes out, this 60-hour window, over the yesterday and today and tomorrow, to 60% of the globe's economy making rate decisions. So I want to see how that impacts as far as moving forward. And naturally, the inflation stories, Manisha, seem to be a good sign. So, yeah, we've just got to make sure that if crude stays around these sort of levels, it's a plus. But should it go higher, then that changes the footprint considerably.
Oh, yes. And, there are also reports now, Peter, that we could be looking at a breach of $70. I mean, that's not too far away, right? We've already seen that happen with WTI. So are we heading towards 65, 62? I mean, those are the numbers now coming in reports.
Well, you're under 73 for Brent, so there's every chance you could crush, 70 maybe. I'm not suggesting this week, but the lead up to Christmas, you had 3% stripped out yesterday, Manisha. So, the old story, don't catch a falling knife. And at the moment, it's a big knife and it's gaining momentum to as it falls. So I would say that it's probably got further downside. And yeah, maybe it's going to be a mid 68, 67 handle. But, it's not unusual. When it bounces, it'll bounce hard to the upside. So, yeah, let's just see where it all rolls over the next couple of sessions.
And it's not just about the crude oil prices, Peter, because natural gas is yet another one. Because if you look at on a week-on-week, month-on-month, year-on-year basis, there are big negatives coming in for this one. The supplies are enough. The 1-year, 5-year average, we're looking at inventories on much higher than that. And the demand from Europe, Japan, South Korea seems to be moving more towards coal rather than LNG.
Yeah, well, that's an interesting story, isn't it? I mean, as far as power plants and so on, so the demand for coal has been significant. The other side, as you mentioned, nat gas has really come under some big pressure, and it's a wild trade, nat gas, as far as volatility. So they're pushing it down. And again, we've just got to see how it rolls into the end of the year. and whether you're going to see some sort of respite. If you saw really cold weather, Manisha, then that could change the footprint again, in that east zone of the United States if the winter becomes very, very harsh. But at the moment, it seems to be relatively not a bad winter. But as you know, Mother Nature can change things very, very quickly.
Oh, well, absolutely. A final question really, Peter, on this one is on the US Fed meeting tonight. And I think by the time US markets open, all eyes would be on that one. So what are you anticipating?
I'm not anticipating a rate change, Manisha. I think I'm looking forward to hearing the rhetoric coming from Fed Chair Powell. Read every word very, very carefully. I'm sure it's very intriguing as you work through each word and each phrase and each sentence, because as we move into 21, that so many people have baked in significant rate cuts, and are they going to materialise, and are we going to see, the first rate cut April, May? So again, 24 is going to be a very, very exciting year for commodities, currencies, and that's why I took this out of the library, Manisha, our dear friend. I'm reading it with glee. I only opened it, I meant that today. So that's my Christmas book to read.
All the best with that reading, Peter. But thank you so much for joining us, and hope to speak to you very soon again, because lots of interesting stuff is happening right now and you're bang on various analysis there. Thank you so much for joining us.